Welcome back. You're watching Crystal Ball. I've been in conversation with Samir Arora of Helios Capital. I remember you telling me, maybe not many quarters, but many years back, that this fine-tuning of PEs, the PE should be trading at 14.5 times, is something that you find quite amusing. Because when corporate profits are 20%, then India's PE is closer to 20. When profits are closer to 10, 12%, not that great, then the PE multiple drifts down to 12, 14 times. If you remember that, do you think that 16, 17 times is fair right now? Or is it probably pushing the case, if not overall for the market, then for a few large sectors?
No, so the thing is that obviously many large sectors are going to be permanently shaken up. First is, our biggest company in tech itself is doubting whether this tech model will continue or not. So it's a big question mark. Our real estate companies will be affected because there is a direct attack on black money. And whether those companies take black money or not, nobody cares. Except the analysts for real estate who poor guys have to recommend something. Nobody in a big picture sense cares whether one company is good or bad. The point is there's a direct attack, as it should be, on black money and also indirectly on real estate. There are some other sectors where in future they may get it back, but they have paid billions of dollars to the government for coal license, spectrum license. Now they can say, and the analysts can say, you know, we will increase this, we will do that. But the point is, first you've given, now you can spend the rest of your life trying to earn it back. So those things, what is the point of over-analyzing their earnings? If they are under stress and their earnings may be affected. But this is a journey in going from A to B. So if you are today having, God knows what, 30-40% black money in the economy, and it affects not just real estate, but spending in hotels, maybe travel, maybe purchase of gold. Now you cannot go, unless you say take 10 years to make this transition. So that is why I say it's a long short market. Because you can't go from A to B, everything becomes prim and proper. You don't bribe any government guys, you don't bribe any policemen, but everybody continues to spend, everything happens fine. Middle class, which doesn't pay taxes today, doesn't pay for sales tax, suddenly they all do that and everything moves smoothly. So this process will have many winners and losers, is what I think.
You brought up IT yourself. Let me ask you, are you buying this fairly significant correction in IT, or you're not very bullish any longer?
No, so we have now two stocks only. Total weightage must be around 7% only. And we are not buying right now, but we will buy after some time, one or two. But the questions that have been raised are so deep, so philosophical, that you can't be outright bullish. But, nothing happens in 1 year. And we have seen that companies announce orders which they will start getting in 2020, and the stock goes up for one day today. So nothing happens in a day. Even that model will not be shaken up in a day. So if the valuations are what they are, 14, 15 times, and maybe after 5-10 years there's a big shake, there'll be so many ups and downs that you can't just walk away. The valuations are quite attractive, and obviously that thesis is not totally accepted by us or everybody, that it is over, this model of linear this thing because of cloud or whatever. So we are not extra bullish. We are not selling, and we may add rather than sell. But right now, if you have to buy one stock, it need not be IT.
So which are these other sectors where you find valuations indefensible? You spoke about telecom. Clearly you don't like that. Real estate is too small a sector. Among the big ones, where do you think valuations are still quite uncomfortable and unjustifiable in the event of some kind of a market correction?
No, even in the absence of a market correction, what we have done is sold off at least 6 or 7 stocks, which we made maybe 200 to 400% over the last 2-3 years, just because their PEs have gone to 50 and 60, and in a few cases 70 and 90 for even 2017 type earnings, and 16, particularly 2016, because these guys were all basically, the less liquid, what they are, the high quality names which grow their earnings at 20%, but because they are perceived to be high quality, which they are, and high ROE and high ROC, there is no limit to how far they have been pushed. And we have basically sold off nearly all of them. We now consider 20Ps okay, 25P okay for the moment. But don't give us 50P on the basis that's a great company, because historically they have done well, because we feel that there has to be a limit. And we also pushed it beyond our own comfort because it was going up every day. Finally we said no. So these are You know their names, I'm not giving you, but you know all these stocks.
Okay, let me ask you about a random stock, ITC. It's a core of many portfolios, but lots of question marks of late about the sustainability of the tobacco business. Do you own it in your portfolio, or have you shed it?
No, we've never owned it, and we mostly not shorted it. I have no view on it. It looks cheap and all. And actually, if I look at, because I mostly draw all my conclusions from what happens in the US, which is the proper market. India is just a copycat market. No independent thought is put here. So in US, those have been very good stocks, both PMI and that is Philip Morris International and MO. But somehow we haven't owned it here. It looked a bit too much market cap too soon, too much dilution to employees. Maybe 10% of the company is owned by employees, which looks to me in a consumer company a bit obscene. So we haven't owned it, and we haven't shorted it also. Actually, we missed it. We should have shorted it before the budget, but didn't.
Let me ask you about one sector which you do own or traditionally have owned quite a bit of, private sector banking. Last quarter there was a wrinkle with ICICI Bank. This quarter too there is some asset quality trouble, but Axis was quite good. And there too in pockets valuations have expanded quite significantly in some names. How have you approached this sector over the last few weeks?
No, we have all of them. In fact, we have Axis Bank a lot. We bought yesterday also. And so we have all those names we have. We had them last time also, we have them now also. Maybe we've added 1 or 2% here or there. But we have nearly all those 5-6 top names, all of them. Together must be around 25 to 28% or something. Maybe 28%.
Has your short list changed from the time we last spoke? Because you had metals, you had real estate, you had public sector banks in your short list. But have you changed that or added to that since we spoke last?
We have telecom. But in general, we covered the real estate one this month because it fell some 24% in this settlement. So we covered it 2-3 days ago. But generally, we'll be happy to reinstate it if it tries to go up a little bit.
What about sectors like cement, which some people are very bullish on, others find it very expensive, or pharmaceuticals, where there are very high quality companies, but some of them are again 30 plus P multiple. How do you approach these two sectors?
No, cement we don't have either way. It's a bit complicated because also if I want to short them, they're very liquid. And long, we don't like all these commodity type names. We don't like all these things that we are a cartel, so what a great thing we are doing. We don't like all that. Now coming to pharma. Actually, we didn't have much before we bought this part of this deal that happened, little bit, because it looked like that day a good discount. Let's see. It's coming into the FTSE index on Monday. Maybe somebody will buy it that day.
What worries you the most, Samir, about this market now? I mean, you clearly don't seem too bothered about earnings catching up. Matt, you said the worst is over. If there is one thing which tops your list of worries about India now, what is it?
My worry is that this politics is taken to a stage where half or whatever, 1/3 of India is feeling proud and gaga over the fact that they have stopped legitimate things. And no other reason is given except that they also did the same thing to us. I hope that our public doesn't accept it. Right now, I think that everything that was to be delivered, other than these two things which are going on, GST and land bill, most of the other things that government should have done have been done. Now there is a implementation of that and ongoing this thing, but more than that, no shooting ourselves in the foot by acting tough against the world. There is no need. It's not that it is a sign of jingoism or something. There is no need to not respect people who have put $300 billion into India and make it look as if they had no other choice. They had choices. But, you know, it's a two-way thing, and it's not just that, oh, that fund manager group doesn't have anything else to do in life, so they put money in India. It should be respected for the fact that it has stuck in bad times and comes in and believes in it more than Indians do. But in a big picture sense, you know, my sort of these days, my not philosophy, but what I tell everybody, and I gave a talk on this in Bombay a few weeks ago, is that if you look at equity markets in India or in the world, and I that time presented more than 200 years of data, that Indian equity markets in general outperform fixed income by 5 to 6% per annum. And this has happened over 100 years, 200 years, 20 countries, everywhere, including India also. So believe in that And today, actually, although these days flows are high, but foreigners have believed more in that than the Indian public has believed, and we hope that Indian public also does it. But don't be disrespectful of the foreigner because he believed in it and believes in it and has supported India at every stage. But otherwise, I don't think there's currently a very big niggling factor in my mind. But I hope that at least GST first round gets in, and then obviously it'll still take a year to see that all whatever state governments have passed and all that. But we can see some progress and everybody will be happy. Otherwise, everything is going quite okay. Nothing so wrong is happening in India for us to be hyper negative or sensitive about it.
Fair enough. Samir, always a pleasure. Thank you very much for your time today.
Thank you very much.